Has ESG failed us? Or is it the portal that will take us to utopia? This is the Commandments of Wealth podcast, where I'm Alex.
I'm Joel.
And we are wealth management professionals from a wealth management firm based out of Toronto, Ontario, Canada, serving 6, 7, and 8-figure entrepreneurs and investors Canada-wide, coast to coast.
And we're going to be going over some of the insights and strategies that we have implemented with our clients to help build, protect, and pass on wealth to the next generation. And today we have a topic that is in the news everywhere you look. It's on ESG, and this article is brought to us by Morningstar. And Morningstar is a good website. We use Morningstar professionally for a lot of our clients. But the article, I guess, take it away, Alex.
So the article is called 10 Reasons Why ESG Won't Be Stopped.
And we're not going to go over all 10 reasons. The link will be in the description, but we're going to go over two that kind of caught our interest, why we may disagree with some of it.
Exactly. I also wanted to add, so they kind of sneak in this little point under the title here. Although demonized, ESG and sustainable investing will survive the backlash. So, a little bit of foreshadowing there.
I like it.
Right?
I like it.
Yeah, a little bit of foreshadowing there. But the point being is, like, out of the 10 points, the only two that we want to cover today to do a deep dive in is points number 1, ESG offers a fuller view of risk. We're going to find out what they mean by that and what we think of.
Yep.
And then 3 is going to be the rise of stakeholder capitalism being good for companies.
Yeah.
So let's get into this and read what do they mean by stakeholder capitalism? What is it good? So let's use their own words to define this. So they're saying that companies are reshaping themselves to appeal to talented workers who are more diverse than ever and tend to consume increasingly, in line with their values. This refashioning is called stakeholder capitalism, in which management considers the needs of an array of stakeholders equal in importance to shareholders. Companies do so on the theory that it will create a more loyal relationship or relationships over the long term that will ultimately enhance company value. And then in brackets, they're saying corporate social responsibility and as a related concept is about the company's own framework of sustainability plans, which ESG measures.
Okay. So I like how they use the word redefining, right? Stakeholder capitalism. When I look at the world and when you look at what a business is, there's really 3 stakeholders of a business, right? You have...
Let's actually flip to this. We made a diagram just to kind of further illustrate this point.
So you have...
Walk us through the triangle, Joel.
So you have the business itself,
right?
And the business itself will not survive without customers.
Absolutely.
And if the business becomes successful enough, or even if the business is looking to raise capital, you need investors. And usually investors will increasingly give you capital to grow your business, the more customers you have.
Yeah.
So this is a circle that you look at, which in my opinion has been the traditional stakeholders of a company, of wealth, of our society that you have here. Yeah. And it's really been driven by profits, efficiency, which has led to more customers in this loop. What seems, or the idea behind what they're trying to say, is that there's now another stakeholder entering the picture.
Yeah, which is outside of this triangle.
Outside of the triangle. So in regards to this diagram, imagine you have now a box on the outside, and it's ESG.
Yeah.
And it's trying to shove itself in as a stakeholder into this triangle.
And a great example that we were talking about before we did this episode is, imagine, let's take ourselves way back to when we were in kindergarten, right? Okay. So imagine the 3 of us. We have a game, we have a ball, we have a game that we play. We all know the rules.
Yeah.
We like the game. All 3 of us have equal amounts of fun.
Yeah.
Now you have, maybe there's a new kid, doesn't have any friends yet. So it's always a substitute teacher. So substitute teacher, wanted to go kind of above and beyond the Call of Duty, sees us having fun and says, you know what? You 3, here's so-and-so, play with them. Right? Because,
play with them within the rules of the game that you created.
Yeah, exactly. Because, if you play with them, then, 4 kids having fun should be, more the merrier, right?
What happens to the game?
So what happens to the game, though, is that 4th person, the rules were built around having 3 people, right? So things change, and now things are kind of be wonky, right?
Okay.
Maybe they stabilize, maybe they don't. We won't go too into that, but what you were saying now is that's what ESG is. ESG is not a part of this framework. It's an ideology.
It's a fourth component.
It's a fourth component. But what's important is that they were just talking about the benefit of a stakeholder, whereas ESG as an ideology isn't a stakeholder. Because if the changes required for this theoretical business to become more in line with ESG makes it so that it has higher operating costs, right? Are the customers going to be willing to take on that cost that the business has to then pass on to them?
Well, that's the question, right? That's the curiosity. We don't know, but you will find out.
Yeah.
Right. And there are various examples now of our society finding that out.
Yeah. Right. And I just wanted to say before we move on to that. So exactly. So if a business has to, so in a harmonious relationship, right? So a business is charging an acceptable price. The customers deal acceptable, which is why the customers go to them. Now, because of this harmonious relationship between the business and the customers, investors say, hey, that's something that I want to be a part of and see grow. Yeah. So they then lend their capital to the business.
In order to grow quicker.
Exactly. So if this particular business struggles to operate in a way that is harmonious with the customers while trying its best to accommodate the ESG ideology, are the customers going to stick around?
Or are the investors
going to stick around?
And over time, will the business stick around?
Exactly. So, and then to do the looking at it from the business side, the negative, the worst case scenario for the business, right, is if the business goes under, there's no cost to the ideology. That is the ESG. If the business goes under, the customer's just like, well, gee, where am I going to get my knickknacks? Right?
Yeah, and if the customer suffers, the investor suffers, the business suffers, the economy suffers.
Exactly, right? But ESG, it's just an idea, and it's an idea that is very attractive. So, but it's unaffected by.
Yeah, I agree with you, because what you're saying and what we're trying to communicate is that historically a business has been made or created to not only help society move forward, but to do so in the idea of generating a profit in a productive manner, become a productive member of society. ESG is now a component, and you're starting to see in some instances that because it's so aggressive in how it's being incorporated into some of these businesses, the business is not as efficient. The business is not as profitable. It's leading not only to customers suffering, things getting more expensive. You can even see this today in our society. In Europe, it was a very, very easy example. Yeah. Right? In Europe, they were focusing so much on ESG that they were willing to forego cheaper energy sources, natural gas, oil, nuclear power. And then when they had an exogenous event that they cannot forecast, which was Russia and a dictator, all of a sudden, their whole model blew up. You have now inflation running in Europe in some cases at 20%, 25%.
Which is
businesses are closing. You're having rolling blockouts. Is this efficient? Is this productive? So the argument becomes, if you go back to that triangle very quickly, is if you're not careful and you try to apply that fourth component in the corner, ESG, and you try to shove it too quickly into a functioning society and a functioning business, you may run into consequences that were unforeseen and that cause more damage, and then set you back for a longer time period that was necessary if you took a more balanced approach.
Yes.
Right? And that's kind of why when we're looking at point 3, it really funnels itself in very well to point 1. Right? So that's what they meant by stakeholder capitalism. And now if you go to point 1, what is point 1 here?
We're talking about a fuller view of risk. So they're basically saying, risky, quickly highlight. So they're saying a risky element of investing, and for fiduciaries, assessing it has become critical, augmenting traditional investment analysis with ESG information, which provides a more complete information set. So they're basically saying that, if we add ESG, you're not diminishing the data that you're looking at when making a good investment decision. You're actually adding more breadth to the data.
Less risk, more breadth. And I get the argument, right? The argument is that if you have these ESG components, you have quota systems, you're looking after, you're conscious of what you're putting into the environment, your governance is strong, that society itself will be better. I think businesses in general tend to do that regardless.
Absolutely.
There are bad actors. But running full steam ahead into an ideology without looking at the potential consequences is very dangerous. And you're seeing this. We mentioned Europe. Another example is Sri Lanka.
Sri Lanka, yeah,
right?
Exactly.
So Sri Lanka, now there's a lot of things that went on to Sri Lanka, a lot of corruption. But what really, really pushed them over the edge was them needing money because they were going through a very difficult situation. And the IMF and the World Bank said to them,
you need to get that ESG score up here if you want us to lend you some dollars.
And they did that. Yeah. They ended up with the highest one of the highest ESG scores in the world as a country
at that time.
And so, they cut off their farming agriculture. They weren't importing oil or pulling it out to the ground to the same degree. And the result was the entire country collapsed. It broke down. The farmers didn't want to farm or they couldn't afford it. And it turned into a disaster. And then now those people who implemented the ideology were gone. And now the country is forced and now it's trying to recover.
Exactly.
Right? And this is the problem, is it was an unforeseen consequence and it forced the issue. We believe ESG, or the idea of taking care of the environment, taking care of your employees and being cordial with your customers and having their best interests in mind, all of those things over a long enough time period, in my opinion, will play out. And if you don't focus on those things in a balanced manner, your business will not succeed because corruption cannot succeed. Being ill towards your customers cannot succeed, and treating your employees in not a proper manner will not allow your business to succeed over a long enough timeline. But forcing these ideologies can lead to consequences that you do not see. And even now, with a more common example is Apple.
So if we just quickly pull up Apple's ESG score.
Apple's ESG score is pretty strong, right? So here, what does it say here? So
it says Apple's ESG score is 16.88. So again, being lower is better.
Being lower is better.
However, they have a little bit of a risk rating here.
What is that?
In the significance. So basically the social aspect. So I guess it's because of the scandals that they're in right now.
Well, the
society,
the governance.
The governance aspect,
right? They make most of their stuff in China. Foxconn. People have no problem with owning a $2,000 iPhone and virtue signaling all day. Well, what about some of the people working at these factories that are only getting paid $5 a day, who are jumping off the factory, so they have to put nets so they didn't commit suicide, right? Or today, why some of the Chinese residents and civilians in China are very, very frustrated with being locked down for 3 years. So they're out requesting reprieve.
So basically what Joel's mentioning is, we kind of touched on this in our last ESG video too, is that within the context of ESG, there are 3 pillars: environmental, social, and governance, right? You can effectively buy greenwashing. You can effectively acquire
one score,
a good score, because they're taking 3 pillars and they're giving you one number. So you're saying like, okay, I might not be good in the environmental side, but I will basically use my excess capital to redivert that capital to good causes, or to help other people become environmentally.
You see that very often with oil companies, right? Oil companies have a bad environmental score, so then they focus a lot of their resources to the social or the governance side. Apple's the other way around. Apple has a very good environmental score, but terrible governance score.
Governance, exactly, right? So with all that being said, like, I think that's great. With everything that you said though, Joel, I really want utopia.
We'll get to utopia.
But I'm just joking. But like you said, I will say, ladies and gentlemen, like, humanity has done so much in a short period of time. And it's getting faster and faster. People are getting smarter and smarter. If I could be so bold and say that I think humanity will get there, whether it's called ESG or not.
Right? We will get there.
We will get there, whether it's called ESG or not. And that brings us into our commandment of the day, ladies and gentlemen. Be wary of ideology, lest it cloud reality.
Exactly. And with that said, we want to conclude. That's the commandment of wealth. We believe ESG is good over a long enough time period, but we can't force it down our throats.
Exactly.
I'm Joel.
This is Alex.
Until next time.
Exactly. Links and everything will be in the description. Please like, comment, and subscribe if you enjoyed the content. Love to hear from you. Till next time, everyone. Bye for now.